back on Morning Movers. We'll get a closer look at Palantir this afternoon when the company reports first quarter results after the closing bell. Palantir expected to report adjusted EPS of 13 cents per share on revenue north of $860 million for the quarter. Shares are up more than 390% over the last 12 months and nearly 65% since January 1st. Time now for Options Corner. Joining us to take a deeper look at Palantir, we've got Rick Ducat, the Duke of Data himself, lead market technician here on Schwab Network. All right, Rick, talk to us about the trends that you are noticing on the chart from Palantir.
Well, to put it simply, the trend is up for Palantir. When we look at it against its benchmark, XLK technology sector and the S&P, I mean, it's blowing it out of the water here, up almost 400% during the past year. And we find ourselves at a pretty interesting point to start out this week. We are quite close to these old highs that we saw here, 125.41, this old all-time high here. And now we can see we have, held on to some of those gains from Friday so far. We can see that we are sticking with our white short-term trend line here. RSI made its way into the overbought area on Friday as well. So it also made new relative highs when we look at that. So that's an encouraging sign for more bullishness in this name. We're above our moving averages. They continue to diverge farther apart from each other. We would look for the moving averages starting to shift sideways or even reverse their slope. That would be the start of the warning signs for potential trend change here. No signs of those so far at all, Diane.
Okay, no signs of that so far. But then what happens when we zoom out to your longer term chart?
Sure. And first we can take a look at our volume profile and standard deviation channel studies. Most of the volume for Palantir pretty low on our chart, relatively speaking here. Around 83, 84 is our heavy trading area. So not too terribly much help for assessing support. If we were to look a little higher, though, we can see our blue linear regression line lines up with our yellow 21-day exponential moving average, so our line of best fit with our short-term moving average right around 103. So that could be a supportive area to the upside. +1 standard deviation channel comes in just above 133 based on Friday's close. Quick look at a longer term picture as well. You can see the meteoric rise here. We have really made our interesting push to the upside. All the heavy volume really much lower as well when you look at the longer term picture here. So one that could be primed for a breakout. Not saying it's going to happen. We're just near the highs with strong momentum.
All right, near the highs with strong momentum. Thanks, Rick. Now take us through an example trade. We've got Tom White, senior options contributor in the other half of Fast Market. All right, Tom, so how would you go about an example trade for Palantir ahead of its results?
Well, not surprising, implied volatility levels really elevated in this one. The option market's pricing in about a plus or minus 13% move in the shares going into this report. That's about $16 either way as of Friday's close. Now with the stock trading about $124, you can get some pretty big moves in this stock. As Rick mentioned, it's overbought. Revenue is supposed to increase about 36%, and that's an increase from last year, same quarter, of about 21% revenue growth. So expectations really elevated in this one. So you want to stay risk defined with an example trade. And the one that I've got is a neutral to bullish type strategy, where I can sell something to the downside on the puts, sell a vertical there to take advantage of that higher implied volatility. So going out to the May 9th weekly options that expire this week on Friday and just 4 days away, we're going to sell the 115 strike put, and then against that, to make it risk defined, we're going to buy the 110 strike put. So a short $5 wide neutral to bullish put vertical. You're going to collect roughly about $1.50 credit if the stock opens about 124 here. That's what you can make, $150 per spread with $350 in risk. But it does take your break even down to 113.50 to the downside. You can see that. That's about 8.5% below the $124 level at this point. And your probability of that break even of about 113.50 where you start losing money, about 65% probability that that break even level is going to be out of the money at expiration, which is what you want on this type of strategy. It's not an aggressive strategy, but maybe you don't want to be aggressive when the stock's in overbought territory. You want to take advantage of that higher implied volatility. The ideal situation here is the stock goes higher, the stock stays where it is, or stock goes lower, remains above 115, and that way you just let this go out worthless. You keep that $1.50 credit or $150 per spread that you collected on the initiation. This is a don't be a hero type of strategy, and this stock might warrant that at this point, Diane, just due to the fact that it's already up nearly 400% over the last 12 months.
Yeah, I like the way you characterize that. Don't be a hero. That's an example trade for Palantir. Earnings due after the bell today. Thanks, Tom.